Welcome, ladies and gentlemen, to yet another issue of the Grey Market Talk, the second in 2024. I am Thorsten Wegener, a former market maker who sometimes thinks he understands the world and sometimes he doesn't. But if I don't, I have my fallback guy, Nic Themistocles, former market maker for the bonds, market vigilante, portfolio manager with 225 trillion assets under management, and now retired, as I am. Too much time on our hands, not really. But we still love to shooting the breeze and how this whole thing generated. We thought, well, we should actually one day, let's simply run the camera when we talk about markets. And hey, we are now at episode 35. Nic, good morning and thank you for joining me.
Good morning, Thorsten. Morning, everyone.
I hope I did not exaggerate too much the assets you had under management.
Only by a factor of at least a zillion. How's that?
Okay, now I just have to show up a little bit because next weekend there will be no Grey Market Talk because Nic and I will be holding a seminar in Seeheim on the option side. Nic is my star guest, and so therefore we can't run the camera. It's all proprietary then for the time being. Anyway, there happened a lot of things in Germany this week. And as I was busy preparing my seminar, I wasn't too deep into the market. So I thought, yeah, you know what? Let's talk about the political stuff going on. And I share my screen because it's quite awesome what was going on. And there are a couple of other things. So you see the picture, Nic?
I do indeed.
You see what that is?
It looks like a protest with trucks and or tractors, I should say, heading towards the Brandenburger Tor.
Yes. Oh, you even notice the locations.
I
The
do. I
street
was there a few weeks ago. So
the street of the 17th of June, which used to be the rebellion of the GDR against the bloody communists, which was worn down, and a lot of people died at that time. That's why they renamed it in West Berlin to the street of the 17th of June. It directly goes to the Brandenburger Tor. On the left, what you can't see is our Reichstag, our Bundestag. Excuse me.
you can see the head of it, over the trees.
Yes, actually, you can see right here in the corner. There is the
Yeah,
little, how do you call that in English?
dome.
The dome. Yes, you can see the dome. Anyway, that's where our enlightened politicians are. And why are the farmers on the street? Obviously, Germany is broke. We discussed that on the podcast as well. They were suddenly missing 100 billion because the Supreme Court said, listen, guys, you can't just take the Corona money and the money you haven't spent, which were about 60 billion of the 100 billion, which they call the Sondervermögen, which basically debt, yeah, you haven't taken out yet, and piss it away on everything you like. So that's no. Suddenly, they had a hole in their budget in Germany of about 60 billion. So what are you going to do in this? You could call an emergency again, which would allow you to take on more debt. But people are not sure, even the greedy politicians, whether you can call an emergency for anything. Because one day you wake up in the morning, there's no milk in the fridge, and you call an emergency and say, well, it's a horrible situation, I have to do something. They had to save money. And in their enlightened, excuse me, I put on mute for a second. And in their enlightened, well, strategies, they start cutting everywhere. And they went in and did cut money on the farmers' side. Yeah? And this, by the way, picture, this week you had troubles getting into Frankfurt because they blocked the main road into Frankfurt, which they did in all major German cities. And the international press picked up on that, actually. Yeah, that's something in Germany is going on, which is pretty much unheard of. We Germans don't do demonstrations, at least not the conservatives. It's not going to happen. And suddenly it happened because there is a subsidy for agrardiesel, which is petrol they are using, the farmers are using, and it has a so-called subsidy of 20% to the market price. First of all, I hate the word subsidy. Just because you tax less of somebody, that isn't a subsidy. That is a tax reduction. A subsidy is if you don't take anything of anybody and then you give them money. That's a subsidy. But if I tax you 100% and only then tax you 80%, that's not a subsidy. That's just I'm less greedy on this. But Hey, if you control the language, George Orwell was the one who made it prominent. Yeah, you control the thinking. So let's not call it a subsidy, but they said, okay, we have to get money from all sorts of places. Let's take that away from the farmers. And also, they are tax exempt of their tractors, vehicles, the road tax. So let's introduce that as well. And for the farmers who are highly, highly regulated anyway, because the European Union tells them what they can do and can't do. Oh yeah, you can harvest on this field, you can't do on the other. There are special rules. You can use these fertilizers, but you can't use others. You have to provide data, statistics. So roughly 50% of their income is coming out of, again, the word subsidies. Yeah? They use that as ammunition to say, oh, the farmers are just greedy. No, they're not greedy. I'm a country boy. My grandfather was a farmer. My mother was a farmer's girl. When I grew up, my uncle and my auntie, they still have a farm, and the whole family was pulled in every summer when there was harvest, every autumn when there was harvest, and they work hard. They had cows, they had pigs, they had everything. They got up at 5 o'clock in the morning, and at 11 o'clock in the evening, there was still something to do on Saturdays and on Sundays. And each increase in productivity, new technology, didn't make them go to take more holidays and have cocktails in a bar somewhere. No, they worked just as hard. They just increased their output. Yeah? Productivity increased, output increased. Their workload didn't go down. So they're some of the hardest working professions I know. Yeah, if you tell me an investment banker works hard, that's bullshit. Nick, when I got the emails at 11 o'clock in the evening from some guy in investment banking who told me, oh, he had to file thingamies at corporate house, I knew the buggers were sitting there till 10 o'clock till they sent email out to me so that I would think, oh, look how hard they're working. Complete and utter rubbish. Guys who really work hard, farmers. I have the experience. Anyway, you see here prices. This obviously made the internet. And one petrol station somewhere in Daupetal put the prices, they closed for the day to support the farmers, put the prices up without taxes, how they would look in Germany. Diesel, 73 cents. And on the right side, you see the diesel price as it was on the same day with taxes, 2 euros 22. So, yes, talk about subsidies, right? You give the farmers the diesel they need to produce for all things. Food, food we all eat with a population of 8 billion people worldwide. So you take that away from them to save money. Okay, fine. You can discuss that, but the farmers obviously had enough of it. And because this is the savings potential out of this thing which has now hit the international press that the farmers make well, have a demonstration out there and actually pulling a lot of the conservative liberals in to say, no, we support you, because usually we don't support striking people. In this case, we say, yeah, you know what, there is a real cause. And you see here how much you could, or the government can save for the budget by taking these tax reductions away. That's roughly 1 billion. And then you see the other big blocks where we could save in Germany. Migration costs a year is roughly 50 billion. Yeah? And our foreign aid budget is 62 billion a year. Let that sink in and take it by 10. How much money we spend over a decade? We're talking about 10 billion for the guys who produce food, and we're talking about 500 billion for migration into Germany, and we're talking about, well, 619 billion euros in
Foreign aid.
help, yeah, for countries like China, who outsmart us down the way. My favorite country, India, who go to the moon, become a beautiful middle-class society with hard work. You know, bullshit. Unbelievable. Just to put that in perspective, where we are right now in Germany. So I'm obviously not the only one, or the guys who are sending out these lovely memes where we could save money. And then even our enlightened chancellor, which we have here in front of us, came out, and the Spiegel, the main lefty newspaper we have in Germany, the big tabloid, yeah, they called themselves once the Sturmgeschütz der Demokratie, the big gun of democracy. He came out and said, we have to get rid of, how did he translate that modestly? Wir müssen endlich im großen Stil abschieben, Nick. We have to finally deport a large amount of illegal immigrants or whatever. Yeah? Would that be the right?
Ja, aber ist that what he's saying? Wir müssen endlich im großen Stil abschieden.
Yeah, that's what he's saying. And
Wow.
until he came out on the Spiegel, if you said that in public, you would have been a Nazi, without any doubt. The lefty press would have shouted you down. How dare you say something like that? Are you completely crazy?
Wow.
You must be a right-wing populist. Huh? So
Wow.
now our chance is out because, going back one slide, what he probably has seen, as we've just seen, really pissing off the farmers and jeopardizing your own government could actually cause some trouble, especially if you only make $1 billion a year. However, there are 50 billion, and we celebrate every tax reduction for the hardworking citizens, which amounts maximum to 7 or 8 billion, as a big thing. No, look at this, what we're having here. So anyway, you see a shift in perception. Yeah, every common sense things suddenly are being discovered by the guys who want to save money to take it away, and it's not being. I would have crucified this guy. How can you say that? And I would have made it out of a point of righteousness, Nick, because you know me, I'm liberal. I was an immigrant in the United Kingdom. You're an immigrant in the United Kingdom, or your family. We like open borders. We like when people can move from A to B and back and forth. What we don't like is if they come over and are not contributing anything and take it away from me. I hate that. Yeah, I was in the same position. I contributed, and they've realized that now. That obviously all these people are coming into Germany are not what they used to tell us: doctors, surgeons, engineers, and I don't know, pilots. Because if that would be the case, we would open our borders even wider. But that doesn't seem to be the case. So we are spending too much money in Germany, and we've already talked about the Bürgergeld, our basic income in Germany for everybody. And I think I spoke about that half a year ago, right at the beginning. What you can see here is if you would make money that would be taxed, you would have to earn 39,000 to get the basic income. Yeah. The medium income in Germany for people who work and pay taxes and do not get subsidies from the state is 43,842. Now you are going to tell me, with a difference of, let's say, roughly 4 grand a year, how much is it actually in your own interest to work 40 hours a week as opposed to not working at all, maybe doing something on the side, yeah, black market wise, where you don't pay taxes on? We are actually making work in Germany not beneficial anymore.
Sure.
At the lower end of the spectrum, without any problem. There are a couple of guys I spoke to, and they said one of the guys is in the cleaning business. Yeah? And he has a large company, employs cleaners. He has absolutely staffing problems at the moment. He said, yes, of course, I would love to pay them more, but then I don't get the contracts anymore. Yeah? So, but if the competing in air quotes employer is the German state, what am I supposed to do, Thorsten? I said, I don't know. I don't have an answer for you. Clean yourself. Yeah. it just shows what kind of bizarre situation we have here. And that also fits nicely in, I didn't call it the absurdity of the week, but we could call it the German, well, Minister for the Economy and Vice Chancellor, Mr. Robert Habeck, was this year celebrating, beginning of the year, that German CO2 emissions are at the lowest in 70 years because they came massively down in 23. Obviously, how he was selling it, that the big change in energy production in Germany or usage is responsible for this marvelous development. Nick, can I have your take on that? What do you think it might be coming from?
Well, we know that growth is lower for Germany than it has been for a while. So, you can imagine there's a lot of this cut in emissions is also due to a cut in production. It's possible that it's sort of because they're using less coal, but I think at the end of the day that nobody, no independent thinker would possibly argue that the German energy policy is anyway a positive thing for Germany right now. I think it's made Germany very vulnerable, and low emissions or no low emissions. I don't think anyone, as I say, who's not involved in this thing in government, is particularly proud of that.
That's what went through my head as well. I thought, okay, fine. Yes, they say 50% of German energy production is now out of renewables. What they're not telling you that is at peak renewable hours. Yeah, the wind is blowing, the sun is shining, fine. We can have 50%. The rest has to be coming out of fossil fuels, and fossil fuels are being used where energy needs to be reliable. And I think the drop in CO2 emissions we very simply see in Germany, yes, industrial production goes down.
Yeah, I mean,
The
I
shift,
think if you argue any other way, then it's you're manipulating the story. It's another narrative from government to say that we're doing the right thing, please support us. But I think that's wearing thin these days.
it's having implications of the world we're living in, yeah? Because especially if you think about the European Union, of course, the European Union is what it is because of Germany's financial powers we used to have. Yeah? We pay 20 billion a year. Frenchies pay 10. France is a very big, very strong nation. But hey, Germany's paying twice as much. How long can we do that and keep this whole boat floating, especially with all the subsidies that are going into the former Eastern Bloc? And if we get a new candidate for the European Union, which seems to be fast tracking at the moment, the Ukraine, they need a lot of money to rebuild their country after this war. This war is now going into the second year in February, Nick. And you told me in the green room earlier something very interesting. I haven't heard about it. Maybe you like to elaborate on that.
I think you're referring to the frozen Russian reserves, which were, withheld by the US and the Europeans and the UK, 300 billion.
Yeah.
And on the 24th of February, which was the day of the Russian invasion into Ukraine, 2 years later, so this February coming, G7 are going to decide, well, what should we do with this money? And already there's a proposal on the table, which has got the support from the US, well, it's a US proposal, UK, Japan, and Canada, that this money should go to a good cause and it should no longer belong to Russia. So it's no longer frozen, it's stolen, or it's taken, it's withdrawn. We should, give it to the Ukrainians so that they can rebuild their economy. And of course, where they're going to build their economy, they're going to give contracts to the Americans, to the Europeans, to the Brits, etc., so that this money is effectively recycled into the West. And the problem with that is, whether on moral grounds or not, this goes back to something I think is a line that you probably should never cross, and that is, the promise that international rule of law, rather than trying to pick some moral argument as to why you should take the money, the rule of law is that your money is safe, and it's not about what you believe or not believe. But if you've got your money in a bank account and you sort of disagree with the government, in the current line of thinking, the government will just take your money away from you. And this sort of, as I say, it crosses a line where you could make all sorts of parallels. And I know that there are going to be loads of people listening to this thing who say, oh, well, they shouldn't have invaded and all of this stuff. Sorry, my word is my bond has been sort of in our market for a long time. And the rule of law is the thing that sort of divided the West from other economies in the past. And I think the moment you cross this line, if I was a foreign investor into the West, I would be thinking twice about how much of my reserves are going to be in Western bonds, Western stocks, where I should put the money. Should I have my gold reserves somewhere in London? Should I perhaps move them somewhere else? So I think the implications of this thing, we just honestly, nobody knows, but they're not going to be just ignored. Obviously, Russia will retaliate. They'll take, their slug of money, and then suddenly, before you know it, it's mayhem. And And this is all because politicians today are unable to negotiate without the effective nuclear option. So this is the equivalent of the nuclear option. And the fact that you've gone so far means that the politicians have not been able to work their way into finding a solution and understanding, both sides of the argument. So if they can go this far, then they can go the whole hog with nuclear war. And I think that should frighten everybody. And it's not meant to be a frightening statement, but I think, the fact that the government's now planting, in my view, articles in newspapers about why this is right and why they should do this and all of the above. And I think, be careful. So we just don't know what's going to happen, but in 5 years' time, we'll probably find out.
Well, I think it's actually very interesting. You run a government, yeah, you're in parliament. You have all these resources you can pull in. In Germany, in the Bundestag, we have the Wissenschaftliche Dienst. These are the coneheads, the really bright guys who have views into history. And when you told me earlier this story in the green room, which slipped my mind, yeah, that they're actually planning to, well, repurpose this money and say it's not frozen anymore. We just take it away, give it to Ukraine, and the Ukraine buys stuff with us. So it's finally ending up in our pocket. We just choose a deal to not steal it directly from you and keep it. We give it to Ukraine first, and then they give it to us because then we have the moral high ground. One thing that immediately slipped to my mind, the League of Nations used to be something like the United Nations before the Second World War. And when they started pissing off the Japanese, you know what the Japanese did? They left the League of Nations. When they started squabbling with Germany, Germany left the League of Nations. So you're not longer bound by a word or even sitting in the meetings and trying to get some consensus going. You just say, yeah, fine, you do whatever you like. We do whatever we like. And if we have these implications now that they simply say, fine, would you, in your future, I don't even want to call you a rogue nation, yeah? Let's say you're the dictator of Cyprus suddenly, Nick. Would you put your money into US treasuries?
I think this is really almost a personal thing because this is such a topic that's so emotional that people are saying, no, they're right. They should say, how dare they from invading and blah, blah. And I have to say it's a personal choice. And I would be thinking twice, and even if it's a personal choice, the BRICS, which are sort of making up, the majority of the population, the majority of the oil output, and, the future, the future growth of the economy. No, I wouldn't do that. I wouldn't be advising them to do that. And therefore, you can imagine that, for example, the net international investment position, especially in America, is, there's a lot of foreign money who's invested in, the S&P is invested in, you tell me, where would you invest your money? You'd find another use for it. And I think, potentially this is the proof in the argument for gold. But it's also a time where, as I say, I don't think the result is going to be on the 25th of February, i.e. the day after the decision, that all hell will break loose. I think, at the end of the day, this thing is going to be very well thought out by, the other side, if you like, international investors, BRIC investors. And I think they'll come to that conclusion. And gradually they will disinvest from the West. And I think that will be the normal expectation, and the role of gold in settlement of international transactions will probably increase as a result of that. And just the West will lose its trust. But if the bigger problem also is, from the people who, actually live in these economies which are run by these types of politicians, you've got to ask yourself the question, is this something that, you trust your own politician that he will keep your money safe? Now, it's all very well him taking Russian money and saying, well, they did this and they did that. Remember, the Canadian authorities basically held the money of the truckers who were blocking. This was before the Ukraine invasion, 2 weeks before, 3 weeks before. I don't know what it was. It was very close before, but, it's already in their mind. And therefore, having political, opinions which are disagreeing with that whatever party is in power, yeah, I mean, these parties change quite regularly. So you disagree with the next one that comes in, you say, well, you disagree, you've been very vocal about it, we'll take your cash. And, what is that for a world? And it's very difficult, I must say. Really disappointing in the quality of the politicians today. But
Well, you just made my favorite case for gold, yeah, but also you made a case for somebody who is not really into crypto stuff. These developments actually make me become more and more interested in decentralized, non-government controlled currencies like the Bitcoin. Yeah? Because gold, yes, as nice as it is, but you're in a country and you have gold somewhere in your bank safe. Well, the government can simply come, so yeah, fine. You thought it's a safe currency, Mr. Wegener? Yeah, here's the tax bill. Please hand it over. They can't do that with crypto if they don't know that you have a wallet somewhere in the world people rely on. It's a real alternative.
yeah, it is an alternative, but at the end of the day, I think the world will transition into something which everybody is comfortable with for the last 3,000 years, and that's probably gold. But I fully agree with you. There's every reason in the next 50 years. I mean, really, it will take
Yeah.
some time for the world to sort of agree. Okay, let's have some kind of international recognized, currency that nobody can steal. And if nobody can steal it, then, you're back to we don't need the trust. So our world functioned in the past because we trusted third parties. In God we trust the government, we trust the banks, we trust so that it worked when we trust. And the moment you take away that trust, then, as I say, you are in a slippery slope, and it will take you a long, long time to come up with either regain the trust. The next politician comes back and says, what a stupid thing they did. I'll reverse all of that and I'll apologize profusely and hope that, it works well. Or we'll go into this trustless world of crypto, which I think crypto is a natural thing, and it will happen, but it will take its time.
Well, I think it's one of the basic principles of economics. If you don't have to trust people, then just you get value for money. Yeah? To exchange, you don't coerce somebody into a transaction. You don't trust is not needed in a fair society. Yeah? People simply paying with stuff. One of the interesting things is why I'm not a crypto buyer yet is the
Clearly.
volatility. I love volatility, but I want to have a currency where I know that today one Bitcoin buys me one coffee. I don't want to come in the next day where one Bitcoin buys me half a coffee or one Bitcoin buys me 15 coffees. That is actually the basic function of a currency is not there yet, is it?
Volatility is certainly far more volatile than normal risk assets, put it this way. And I haven't looked into sort of where it compares in terms of its volatility versus other risk assets. What would be the comparison? Would it be high yield bonds? Was it, what would it be?
Well,
That
I
right
can't
now?
wait when we see how the ETFs on Bitcoin
Well,
are.
you already see that 2 days after the launch, the price fell 14%.
Talking about give it a couple of months and when all the option trading starts.
Yeah, absolutely. I mean,
Big
that's
size,
that's
yeah.
really the fact.
Volume in the markets, tight spreads, a lot of market makers in there.
Absolutely.
Finally, asset
Absolutely.
class everybody can have an eye on and
Sure.
print around in it, play with it, yeah. Have something which gives you a reference frame in now a working market. That's going to be very interesting.
Absolutely. But, let's not forget gold was, as volatile, if you like, as equities, right? And, yet when you put it in a balanced portfolio, instead of just having bonds and stocks, you put bonds, stocks, and a little bit of gold, i.e., you throw a volatile asset into a portfolio, you end up with a portfolio which is delivering much lower volatility because it's anti-cyclical.
Yeah.
Sorry, and it's not correlated with the other things or less correlated. So you're getting this diversification benefit, and so it's like everything else. Crypto is going to be sort of part of people's sort of wealth preservation instruments, and until there's a much wider global adoption, you're going to see that volatility. And as I say, people are going to be disappointed. It's fallen 14% or whatever it fell 2 days after the ETF announcement, but a day or so before that, I sort of was with a client and said, I expect this thing to fall about 20%. He was like, what, 20%? I said, well, but, sorry, but it's moved a lot. It will come down a lot, maybe 10 grand or something like this. We're at 48,000 or something, 45,000. Can't remember what it was. I said, it will fall down to about 40,000, a little bit lower than that. And, that's about 20%. And, it's quite shocked actually, but I think that's what these instruments are today. But sometimes you just have to not worry about all of these little squiggles, and they're quite big squiggles. But not to worry about them, just shut your eyes and stay with them. And I think that has worked so far.
So the old adage, they sold the news on Bitcoin, didn't they?
Well, they bought the expectation. So there was a lot of expectation, a lot of positive expectation, rightly so, because Bitcoin was beaten up with a lot of the other crypto world, in 2022 and towards the beginning of 23. And then we saw that bounce when people started to understand, actually, this is going to get an institutional backing and it's going to have an institutional type wrapper. So for those people who can't buy Bitcoin directly and need a wrapper, this is going to be quite interesting because it's going to broaden the adoption and also, as you say, broaden the financial instruments surrounding it. Whether that's bullish or bearish is a different thing. But the fact of the matter is, because you can short this thing now a lot easier than you could before. So you've got this sort of much broader adoption, which is a good thing, and I think that will sort of reduce the volatility, and reducing volatility brings in more investors, and then you'll get that sort of the world that you see, the trustless world, with AI. We don't need trust, but less volatile. And I think that just is something that will happen over the next, I don't think it'll be more than 5 years before we get to that kind of stability that you're talking about.
Well, hey, I'm there. Once the volatility is down and you can actually use it really instead of a risk asset as a currency, they have or they deliver what I want, whoever they is. But
Absolutely.
as we seem to be two dudes with trust issues, come back to the treasury bit, because I was thinking, what's the positive part of that, of the G7 nations simply stealing money? Let's call a spade a spade. Wouldn't that also mean you solved your debt problem in the United States? Because hey, if that is now an option, you can always say to everybody, yeah, don't expect any payment.
Yeah, I mean, we could go at a tangent here and really sort of be through conspiracy theorists. No, I think what does it sort of mean for the Treasury at the end of the day? I think we talked about the fact that they will have to rely on more and more domestic funding for debt issuance. So the Germans running around and saying, "Oh, look, we've got a Bund issue. Do you want to buy some?" And I said, "Well, I'm not sure about that. Maybe I'll buy some, but less than I bought before." So you may well start to see more domestic funding or regional funding of debt issuance right now, which is at a time where you've got this huge amount of debt. It's a kind of a dangerous thing. So what does that mean? It means a lot of crowding out. It means that institutions, instead of buying equities, have got, I'll buy this bond because I can't do anything else. And instead of lending money into the economy, they say, well, I can't lend money to the economy. I've got to give it to the government. And that's really not a clever state to be in, and that may well backfire on everyone. As I say, you won't know the consequences for 5 years, but the other way to think about this is that then that also means a bigger role for the central banks. They got to print again, because if they don't have enough buyers for this stuff, the ECB have got to do their job and just build their balance sheet. Forget all the nonsense they're talking about, unwind balance sheets, and the Fed unwind back. That's not going to happen. They're going to go that way, and of course they're going to have to print. And the more you print, the more you debase your currency, and then you'll start to look at the prices of petrol in the station, and you'll look at the price of food, and you'll be saying, why is it going up? And then people will realize that in the trust system, that it doesn't work. So
you know what? I find that actually quite threatening, the thought, because it doesn't seem to be a way out of the situation we have. If you try to fix one thing, two other holes are springing up. The one thing that actually, and tinfoil hat on, China overruns Japan because they have a war with the United States and they can't have the aircraft carrier over there. So Japan is toast. At the same time, Russia takes Europe. Who are the biggest holders of U.S. treasuries? It's Japan, it's China, and it's Europe. So
yeah, actually, Europe is probably as a unit the probably the biggest holders of treasuries around. That's for sure. But
and then
take the war against away, because we hope that's as I say, we'll hope they can solve that, not go that far.
yeah, but that would actually solve the problem.
I don't know if it will solve the problem. I think you just sort of
well, you're debt free overnight, yeah, and you say, oh yeah, the exile government of Europe and Japan, we keep that for safekeeping. You're Brit. You have experienced what happens with your gold and your money when you give it to the United States for safekeeping because they're in the Second World War. How much of the island's money, assets you ever got back? Zip, zilch, zero. The US used it.
Yes.
Yeah, well, we had to pay for the war somehow. So I'm sorry, guys.
Yeah, it's almost like saying, I've got an ingrowing toe now, I better cut my foot off. So I'm not sure any of these solutions that people might think about are going to be the right thing at the end. And I think the world will solve its problem when you get politicians who are able to understand that this is one world. That there is a world, and you can't just say, well, we're going to have it, and no, you're going to have it, and then you have a punch up, and then nobody has it in the end, and they have to come. You need serious politicians in this world to work in the world that we are today, and grow itself out of a problem that it frankly got itself into, and the problems originated from politicians who just thought they could buy votes, and they were doing that. We give you pension, whatever you want, it's okay.
Well, we started with citizens' money, the basic income in Germany. Yeah, that's where you can see if governments, they don't even have the money. They just give it away and let somebody else eventually pay for it.
Spot on. We come full circle to exactly the chart that you showed with the 39,000 you get for not doing anything, or 43,000 if you do.
When you work your ass off in a low wage paid job, yeah.
And if you're a politician, I bought that guy for 39,000. I got his vote. He's going to elect me so I can cock up the system even more next year. And until somebody kind of realizes that even though these people are giving money away, they're not doing anyone any favors.
Nic, we've been brilliant political analysts so far in this show. Let's bring down to the boring financial markets. There are only two things, and we can close on that. Obviously, we had CPI last week, came in stronger than expected, 0.3 instead of 0.2, even though the core rate was at 0.3 on both sides, but the market didn't seem to like it. And I was in the camp that we will see massively falling consumer prices eventually because the recession will be the reason for that. We don't seem to have a recession here. So is my base case out of the window? If the market does fine, we will not see falling CPI. We will just slide through the election year. Economy will be just fine, but inflation will stay at elevated levels or might even increase further, which is not a good case for the bond market, which itself would not be a good case for, I don't know. How do you expose yourself now in a market like this where we think, yeah, we've expected lower CPIs, it's not coming in. And that's why I take the pitch. Next week, we have retail sales in the United States, which I'm looking at. And because that will be interesting, we discussed that on this podcast. Eventually, they'll run out of money. The question we had, how long will they have money? Credit card defaults are at all-time highs in the United States at the moment. What picture are you drawing out of the 3 data points I just threw in?
Yeah, I mean, obviously, I tried to stand back a little bit more. And, last year I was, the world is good and you should be okay investing in stocks until at least 2025. Then you just want to get out of everything. So, you're okay for at least 2-3 years. And then to kind of be a bit more tactical about it, last week I said to you that just before, actually on the 29th of December, I took a short position in the market over the new year. It worked for the first year. I closed it. Market then took off again. I reset it. So I'm of the view that the first part of this year is going to be a bit more tricky tactically, but the year as a whole is going to be good for risk assets. As for the bond world, which is the bond world is the one that reacts to inflation and stuff like this. Well, yeah, the market was disappointed on Thursday with CPI, which consumer price inflation, but it was celebrated with PPI, which is producer price inflation, which came out on Friday. And one of the sort of the charts I sort of showed a client was actually it looks like yields which backed up. They went 375 or 380
Yeah.
in the 10-year US. So it went down from 5%. We talked about sort of why they should.
Yeah.
We also said that it may well be that they'll overshoot. I think they overshot and they went to 4% again. And then I said, look, it looks as though on the chart that there's another leg in this move down in yield. But after this leg is over, so let's just say it goes 360, 370, something like that, 350, don't know, yields will back up again before falling again. And why would that possibly be in a world where you've just said, hang on a minute, we're going to get 3% inflation. What you're talking about, Nick, is about 3.25% 10-year treasuries. So surely that just means you're going to have negative real rates because the real rates are going to be much higher. And I think that's right. I think in the end, that's what the Fed, we talked about that all of last year, why there probably should be negative real rates. You can't run such a huge deficit with high real rates because your tax receipts just won't be enough to generate. So you've got to sort of continue to grow your economy, grow your tax receipts. And this is going back to what happened in the 40s. They capped the yield on treasuries to 2.5. The returns on equities were like sixfold what you get on what you got on treasuries. And I think we're going to be in that kind of world for a while before it hits the fan in 2026 or thereabouts. So I think that's probably where we get to. And, that's the kind of longer term thinking. But tactically, these numbers 1 month here or there, one thing we didn't talk about is 3%. Lots of people talk about 3%, 3%, 3%, never 2%. Some people think we might get to 2%, but at the end of the day, with all this printing that we know that they've got to do, that inflation is probably going to eke up because, M2, money supply is what drives inflation, not the other stuff. And that's probably going to be higher. So it could well be that you might see the Fed this year at some stage actually say, well, we've thought about it. I think the target's going to be 3%. It may well be that if you get a low print in CPI, they'll use it as an opportunity to say, mission accomplished. By the way, it's now 3. And we'll be in that kind of world.
I've heard that a couple of times now, that 3 is the new 2.
Yeah, I think so, because we know that they have to print. We know that they have to expand the money supply, probably a little bit faster than what they would normally be doing. So the normal rate of money supply growth for the States is about 5.5% to 6% in order to get a 2% sort of GDP, 2% inflation and about 1.5% where people use the money to invest. And so that would be a stable kind of thing. And I think most likely that they want to deal with the debt situation a little bit faster, and they probably want to see inflation a little bit sort of hotter than 2%. 2% is, it's nothing. So they probably want to run it at 3%. And that's where I think we'll be in the long run. And, the world of treasuries, everyone is now loving them. I remember when they hated them. I think when you finance your debt domestically rather than internationally, I think you probably need to put a bigger coupon on it to get people to buy it. The Fed just won't take up as much and as fast as it's being issued. So my guess is that in the long run, after we see this sort of period of time where rates go down, that we start to see sort of back to 5.5% interest rates again in the long end. Short end, still very low. The Fed will keep it low now. So you get that steep curve.
Good. And then we finally see the equity market crash, because if we see the bloody steepening out of an inverted yield curve.
Well, no, look, I've got to sort of pause you there. like the incorrect assessment of people who spent the whole of last year saying why there's going to be a crash because the inversion of the curve. And now, of course, we know that historically it's actually not when you get inversion, it's when you get the steepening. And the rationale is that, the only reason you're cutting rates is because there's a problem. And that's why you get the crash, when there's this kind of a re-steepening. I don't think they're cutting rates because of anything other than they've got a huge debt problem and they can't afford high interest rates.
Oh, Nick, I think I corrected last week. The theory I also explained on our podcast and on my show with Murad, where I thought, look at 22, first quarter, second quarter, we could have drawn in the gray lines and say that was a recession, and then all the old-fashioned logic would have worked, because also one of the things, equity market is actually a very good predictor for a recession. Yeah? Yeah. Equity markets is the stuff which reacts fast. And now we're waiting for fucking 18 months that the equity market will correct after the yield curve inverted. If you look at 22, the equity market was spot on. It took a dive, 30% correction. We had the two negative quarters, wasn't fine. So if you take now just the statistic logic, recessions don't come after 2 years again. We had our recession if they would have given it to us. So we have a couple of years' time, and would speak for your case.
Yeah, indeed. But I mean, you're possibly right, because we had 9 months of an equity sell-off at the time when economic growth wasn't brilliant. Yep. And that's true. But in Europe, though, it's working a little bit differently. And Europe is very vulnerable right now, especially with what's going on in the Middle East and stuff. The Americans are fine. They produce enough oil. They produce enough gas. They produce enough food. They're fine. The Europeans, sorry to say this, a little bit toast. They're upsetting the farmers. The sort of green policies are saying they should produce less in their farms. They don't produce any energy. Sorry, the wind. It's very, and they're relying on stuff from the Middle East at the time where there's a little bit of a flare up, where it could well be that the supply of energy from the Middle East through the Red Sea is caught. It's not that they really don't think very long term, I must say, and they're not in a great place. They're really vulnerable, I must say, the Europeans.
I'm glad we didn't open that can of worms today, because what also on my call sheet that the Brits are suddenly now want to play, I don't know, sea power again. Let's not talk.
I don't say that they want to deflect the political fallout from a government that's really not done it for the people over the last few years. So what's typical is, well, let's go and jump in on the war and maybe I'll look good. I don't want to say that, but some people might.
Yeah, well, with every conservative government in the world, it seems to be they want to do conservative policies, but only if the opposition agrees on what they have in mind.
Yeah, that's a shame. I mean, they in the UK, in my view, they cocked up the housing market when they introduced higher stamp duty and stuff like this in order to try and win over, some of the left-wing voters, in the same way that Merkel, cancelled the nuclear thing because she wanted to, get the green voters on her side. When you do stuff like this, it's not good. It's not clever. Anyway.
So well, at least we can rely on the lefties. They do what lefties always do. They don't care what we think about it. Yeah, conservatives only. How do the Americans call it? Republicans only in name, yeah? Or in name only. Rhinos. Yeah,
yeah,
we have everywhere. Anyway, on this rather, I don't know, depressing note.
Yeah, sorry about that.
Nick, any last words? And don't bring up a new geopolitical conflict in the last words.
I'm looking forward to the course.
Lovely. So do I. Thank you very much for staying with us today, even if it was more geopolitical analysis and what might happen in the future. We finally got around to talk about financial markets and the numbers that came in. And hopefully we'll see you in 2 weeks' time. Thank you very much for watching us. Share us if you like it and give us a like anyway and leave a comment. Bye-bye.
See you. Bye-bye.